So, Ed, you're a longtime market watcher. You think that the S&P, is probably subject to some profit taking. It's moved so far, but you got a 3,500 year-end target,
right.
And I'm not convinced you think it's all Fed orchestrated. I believe that you think there's underpinnings that you can see in the economy, positive signs in the economy that justify some of the valuations.
Well, we live in unprecedented times, and what's truly unprecedented is we seem to have had a 2-month recession. The economy, economic activity just shut down by the lockdowns in March and April. And if you look at all the major macroeconomic indicators, they all bottomed in April, and we've seen a recovery, a V-shaped recovery in May, June, and July. That's kind of the latest data we have. And I think there's still enough left fiscal stimulus and certainly plenty of monetary stimulus around to probably keep the economy growing, maybe even in a V-shaped recovery continuing into the fall. And then hopefully we'll have a vaccine early next year, and hopefully we'll continue to see employment gains. That's the one area where that we have been seeing a lag, and that's unfortunate, and a lot of people are still suffering. But I'm optimistic that we're still on the right course here of a recovery from an unprecedented lockdown recession.
A 2-month recession. Now, Ed, I'm just telling you that you're an economist, and you're not just playing one on TV, but the economists that we've had on, and we've had our we do these surveys. I don't know which one, but we do a lot of them. We do a lot of surveys. We have partners. We do survey. Anyway, at least 3/4 of the economists I think that we survey say this will not be a V-shaped recovery. You've just called it a V-shaped recovery 3 or 4 times as if you already know that that's what it was. They would take issue with you. They certainly didn't predict it, and I think they'd still argue that it's not because it can't be. With so many businesses still closed, and 25% at best occupancy in restaurants. How can it be V-shaped when so many people still aren't working and so many businesses still aren't open?
Well, I'm a big fan of focusing on the data and letting the data allow me to come to my conclusions. And it definitely has been a V-shaped recovery, as I said, just specifically in May, June, and July. The jury is always out on the future. And my view is that we've got at least another couple of months where it's going to continue to be V-shaped. But I'm not going to dismiss the possibility that at some point we leave the alphabet out of it and focus on sneakers. The Nike swoosh is a possibility. But I think to answer your question, the reason that retail sales is at an all-time record high in July is because we have seen people develop cabin fever when they were locked down. They couldn't spend all the money that they were making if they were still able to work from home. And those that received government support, even they, I think, weren't able to spend everything because we were all locked down. The stores were closed. And once they started to ease the lockdown restrictions, you saw a lot of the cash that had been built up. The personal savings rate, the personal savings shot up from an annual rate of $1 trillion before this all started to $6 trillion in the thick of all this, basically in April when you couldn't go spending. And there's still about $3 trillion in July at an annual rate that I think is going to continue to come into the economy. So the answer to your question is the government's never done anything like this, provided so much fiscal and monetary support at the same time. I mean, it's modern monetary theory on steroids.